What's up, guys? I welcome you in this wonderful video. So there is something very interesting that I want to share with you. I've seen a lot of traders analyzing the market. I've seen a lot of traders making decisions, and I can tell that by the way people trade, or by the way we analyze the market so that we get accurate entries. Let's say you can see the market is moving down here. You analyze so that you can get some good sell entries. But then the way we guys trade, for an example, let's say you can draw your trend line here, and you can see that okay, your trend line is indicating clearly where you should be looking for entries, because the price has been flowing towards that trend line, and it has been respecting it. So the trend line is telling you where you should be getting your entries. Obviously, we don't just enter because price bounced in a trend line. We enter because the side that we are supporting is becoming stronger. For an example, in this case, we enter because the sellers, they are becoming stronger. So here, what traders will do is that they will begin to execute their selling trades all the way down here, all the way down here, all the way down here. And you can ask yourself, why are they entering their sells all the way down here instead of entering their sells all the way up here? The real answer is that they enter here because the market has already showed them the strength, which is in this case this big candle, this big move, and this big candle again here. The market has already displayed to them that we are going down, and traders, they usually like that. They like to enter when the market has told them that we are going down. And the sad thing is that that's not how we make money. You don't make money by doing what the market has already done. You make money by entering before the move begins, so that when the move begins, you are already inside the market. So for example, you make money by entering here, so that when this big move goes down, you have already made money. Let me just demystify something. One person can say, let me erase. One person can say, okay, you say we enter there. How do we know that we have to enter there? Because that's the question. How will you know that we enter up there? So usually the method that I use, it is a method of breakout. You basically wait for a breakout, which in this case, it is there. Let me change the color. A breakout is there, and even in this case, it is here. In that case, it is all the way there. So you can see that the breakouts where you should be entering, it is still early. It is still early. You enter when the market breaks out, And when a person can say, how would you see if now the breakout is happening? Because this is a very huge candle. What you should know as a trader is that in a lower time frame, there is not one candle. This is one candle in the 1 hour. But if I go to the 30 minutes, these are two candles. If I go to 30 minutes, these are two candles. And if I go even in a smaller time frame, this will be 4 candles. Even in a smaller time frame, it will go on and go on and go on. So you have to dig to really find what should back your analysis. Don't just say, no, I can't enter here because this is a big move, and then after the big move finishes, you decide to enter. That's an even worse decision. So if you are analyzing a market, let's say you are, as I said, you are looking at this as some kind of a selling move, and you are waiting for your entry. When you are waiting for your entry, you should always keep your eye on the market. Another mistake that we usually do as traders is that we open the chart, and immediately when we open the chart, we're just looking for entry opportunities. We're just looking for an opportunity to enter, and that's a wrong way of analyzing. When you open the chart, your primary role, it is to look for opportunities to analyze. And then when you analyze, you need to know that the opportunities sometimes won't be instant. It will require you to wait. It will require you to wait. And analyzing, it's all about waiting, and waiting for what? For the right time. It's all about waiting for the right time, because if you just gonna open the chart and say, I wanna sell, I wanna buy, you will find yourself selling here, and then immediately when you sell, the market goes against you, and you cry, you think that the brokers are manipulating the move. So make sure that you don't just respond or just enter from what you've just seen, which is already in the past. Because if you sell here, you're already doing something which has passed. People should be selling up there or traders should be selling up there and then making money as the market goes down. And another thing that I want to point out, let me erase. Another thing that I want to point out is that look at this scenario here. A trader will open this market and a trader will be so excited seeing this curve, saying, wow, the market is going to go down, it's going to reverse, maybe it's going to bounce here or bounce there. Let me put the sell here. He puts his sell. All of a sudden, the market starts to go up, meaning he interpreted this move the way it looks. He didn't analyze going back on what the market has been doing. If you're going to look backwards, we can see that it was moving in our downtrend, which I was pointing out. And all of a sudden, the change happened through this high. Let me just draw my trend line again. So I have my trend line, which is broken here. And then we got a high. Unfortunately, it is not higher than the previous one. And then the market has to give us a low. Giving us a low, it is telling us, and this low, you know that it's higher than the previous one. It is telling us that, okay, wow, wait, the buyers are doing something. And then we're waiting for a high. Fortunately, it gave us another high, which is now higher than the previous ones, which is now higher than the previous one. So because it gives us a higher high and a higher low, now it is a clear sign that the buyers are becoming stronger. And then the question is, why you as a trader begin to sell here? You sold here because by appearance, the price looks as if it's going to go down, but by analysis, it doesn't look in that way. Because even if you can look at the structures, you can see that we have a resistance there. And if you extend the resistance, you know that price is like to bounce here. Why? Because this is the sellers territory, this is the buyer's territory. That's where the buyers began to really prove their dominance, because they broke the previous high. They proved their dominance from this era. So looking at this, you can tell that, okay, now above here it's buyer's territory, but then why are you selling inside the buyer's territory? So that's the mistakes that we usually do as traders. So I hope this video was helpful. Thank you for watching.